Ladies and gentlemen, I welcome you all to the H2 FY25 post earnings conference call of SKP Bearing Industries Limited. Today on the call from the management team we have with us Mr. Srinand Palshikar, Chairman and Managing Director, Ms. Sangeeta Palshikar, Executive Director, and the management team. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to quickly run us through the presentation for the period ended 31st March 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Yes. Namaste and good morning to everyone. Myself Shripada Patil. Thank you for joining us today for SKP Bearing Industries Limited's annual earning call for the financial year 2025. It's been a year of resilience, innovation, and strategic growth. We are excited to share our progress and achievements with you. As we navigate an evolving market landscape, our commitment to excellence, sustainability, and customer satisfaction remains steadfast. Today, we will provide insights into our financial performance, key milestones, and future outlook. We appreciate your continued trust and support, and we're looking forward to an engaging discussion ahead. Next, please. Next slide, please. Just a brief to those who are new over here. SKP was founded in the year 1991 for rolling elements. A brief journey we established in 91, followed by our renewable energy initiatives and expansion into balls, becoming a listed and then acquisition in France on 1st February 2024. Some of the overview of our manufacturing plants. We have 3 plants here in India. Next. uh, for 3 windmills, wind divisions, 2 solar divisions, and 1 manufacturing plant in France. Next, please. Our board of directors, Mr. Srinand Parshikar from production side, Mrs. Sangeeta Parshikar from the finance side, Mr. Kishore Parikh from the financial side, and Mr. Rajiv Lokre from the technical side. Next. Our management team. Next. A brief over here, since many of you are interested in the French acquisition, we had acquired a 95-year-old French company known as Valet Edguarin Industry. It was the pioneer in rollers and balls at that time, mainly into ball. It was a world leader in ball manufacturing. Some of the products, majority of the products are complementary and some are combined, similar to what we are manufacturing in India. Considering the technological advantage, we are now looking forward to improving our technology transfer in both Indian and French plants. Next. A brief highlight on the capacity utilizations. In the roller plant, we have an installed capacity of around 1320 tons, and the utilization is on an increasing trend. Similarly, for balls, the installed capacity was 480 tons. In this financial year, that is FY25, we have installed and increased the capacity to 2000 tons per annum, which will gradually come into utilization. The current figures of capacity utilization are shown for the before plant with the installed capacity of 480 tons per annum. Next, please. A brief on the geographical revenue breakup. We can see the domestic and exports both have increased as compared to last year. Exports have substantially increased. Also, our it's all right. Exports have increased. That's all. Next slide, please. For some of our key strategies for a profitable business and how we are growing. One is we are offering tailor-made solutions to multiple customers. Also, we are having a technology transfer between India and French plants. So we are improving our operations as well as techniques. Also, we are leveraging our global footprint to convert that into global customers and global leads following the growth. Next, please. Some of the key highlights of previous year consolidated. We had a rupees 70 crore 703 million revenue, also for which France contributed to 177 million, EBITDA of 110, and consolidated revenue growth of 36%. Next, please. Some of the highlights of the income statement standalone. The EBITDA margin is at 35.3%, half yearly 25. Next, please. A consolidated, we can see a 36.1% growth. Next, please. Some of the key strengths, as we have mentioned earlier, a stable manufacturing facility and basically exploring the synergies of both plants. Next, please. For the previous year, a few highlights. We had started operations from our plant 3. Also, the renewable energy PM Kusum Yojana 2 megawatt plant, that too was installed in the previous year. For further detailing, I would invite our MD sir, Mr. Shrinan Porshikar, to please give a brief about the previous year and the way forward. I hand over the forum to sir.
Thank you, everyone. I see most of the people who are joined they are with us since very long period, and I know them, many of them personally. Okay, we met them. Uh, this year of 24-25 has been a very transition year, a very big year for us to change from a local company to a multinational company. We are trying very hard to establish our facilities in India, also in France, multiple direction approach. So that has taken a lot of efforts from our management team because we have to focus on various areas. We are trying very hard to and now what we see is 25-26 going to be the fruits, what efforts we have been making for so many years, for so much time. Now this is a time the fruits will start. Of course, we need to improve, we need to establish our new plant with the customer lines, customer satisfaction levels. We have to get back and achieve to the newer heights. So these are the challenges for future, and this is has been the past. And now what we see, new levels of our targets which we plan to achieve in year 25 26 26 27. This is what we have planned. Thank you.
So shall we open the floor for Q&A?
Vinay sir, I now hand over the forum to you.
Yeah. So all those who wish to ask a question may please raise their hand. In case you're unable to raise hand, you can put a question in the chat box and we'll invite you to ask the question. Participants who want to ask a question may kindly raise their hand. We'll take the first question from Mulesh Savla. Mulesh, you can go ahead.
Hi, good morning, sir, and thanks for taking my question.
Thank you.
Am I audible?
Yeah, all good.
Thank you. I just wanted to request you to share a little more detail on our France subsidiary. Where are we in terms of bringing it back to routine? How is the traction with the customer? What is the likely top line that we can expect from this unit in financial year 26? And how it is helping us to transfer some of the technologies and use those technologies in India? So that is my first question, sir. Thank you.
Thank you, Maulish bhai. This is, uh, I would make this question also more elaborate to answer most of the questions which most of the investors got in mind. Okay, because this has been a very focused attention of our all investors. Okay, we have done acquisition in Europe, which is a very challenging area, and out of which France, which is a very highly complex in human resources, complex in the labor laws, applicable laws, also environmental laws, everything. So one thing I would like to brief you, all my investors. Yes, the acquisition has been a very tough acquisition, but we are now very fair and very in very good commanding positions now. Now, my next, the as Moresh Bhai has asked, what is the potential? This is the basic question. What is the potential? This particular unit in 2010 was doing something like 16 million euros. I'm talking about 2010. Okay, that is almost 15 years back. This unit was doing something like 16 between 15 million to 16 million euros at that time. We have all the data of who was the customers. We have data as to what was the product line. We have all the data of everything. What was the product line? What was the products which were used by the customers? How we have lost those customers? To whom we have lost the customers? And what are the products which were supplied at that time? So we have all the data, all the informations. We have a customer contacts. We have all first customer contacts with all the customers of 2010. This is very important. Now this is very critical product. One has to understand the criticality of our product. All our customers want the sustainability of SKP. This is very important view from customer end. They cannot allow us to just get into, just we are manufacturing, we are the same company, we are now established, so we are there to serve. So they will not just take us as a vendor in their database. They want to see if the sustainability of SKP is going to be there 1 year, 2 year, maybe 3 years. So they wait and watch. Many customers which we had a first contact, they are still not our customers, but we have the contacts. Okay, we talk to them, we just request their meetings, presence, we give presentations, how we are changing, how we are evolving. We are at very good growth levels. We are recovering very fast. So our top line is shooting up like good. We have good potentials for the years to come. For the bottom line, yes, we also have very strategic to control the cost from all angles wherever it is possible. We have an innovative approach as a SKP. We have a very flexible organization. So wherever we want to a possibility of controlling the cost. So what is very important for SKP France is to improve our top line and control our cost. So this is the strategy. So we have a very good technological knowledge which is available in France, and also we have a very good technological knowledge available in India. So we are integrating two entities, India and France, and creating new solutions to our customers. So I think we have a very good future.
But sir,
I
can
hope I
you?
have answered all your questions, Molesh bhai.
Yeah, but can you also add some numbers to what you expect for the current financial year? Because now, though, you must have approached all the past customers and they must be having some sort of traction with the company, and some orders must have started flowing in. So if you can just give some color on the top line that we can achieve and EBITDA margin that we can achieve, or maybe your aspiration or your internal targets about the same.
Yes, that is what we can say. Okay, okay, what we are targeting. You must have seen our presentation. Okay, that we want to turn around in next year for 26, 27 for France entity. That is what is our target is. It is already there in presentation and is already uploaded on the NSC website. So that particular thing you can see. That's the number one. Number two, about the top line, yes, we have a very good target. We last year we did around something like 1.71, around 1.8 million euros. This year we have a target of at least achieving double, at least a double. This is what is our target is, and we may be even better. We're not sure because this is for France, for European customers. We are just not even halfway to the calendar year, so they usually work on calendar year. So we have a very good potential. All our customers initially, which were not there last year, are coming back. So it's very interesting how fast and how how they will trust us without seeing us. So it's very important. They are seeing us. They are saying that okay, SKP is going to sustain how we are performing. We have various challenges, not one challenge, various challenges. Financial challenges, I can give you one example. Every For everything what we purchase in France, 80%, 90% we do on cash, because nobody knows us. SKP France is a very new company in France. Okay, so we came in existence in February. So even the bank, even the suppliers, they say, okay, we supply you, okay, but we need a cash. We work on against pro forma, no credit, nothing. So you can imagine the situations. We have to manage all our finances. Even from India, we have to send some funds. Even if that, we have to go follow our RBI guideline, everything. And that's okay. But ultimately, it's the route and rules and regulation we need to follow. So with these all challenges, we are growing at such particular pace, and all cost we are trying to control to the maximum level wherever as per the legal framework. So this is what is the strategy.
Nice. So we wish you all the best for that subsidiary also. And I just wanted to have small understanding on how the plant 3 is ramping up and what can be our overall performance for FY26. So maybe the growth in top line and EBITDA margin and all for 26.
Okay, good question. See, plant 3 is now fully functional, number one. Number two, we have 5 lines fully working. The capacity of 5 lines, when we calculate on theoretical side, is close to around 200 tons. So whatever we have declared as to this is going to the capacity, so it's around 200 tons. So we are already close to the capacity what we were planning to establish. It is state of art. We are talking of next generations, which are where the technological all advantages we have tried to create in Indian situation. So we have all the best of technologies which is there. Now it's the time is coming to demonstrate to our customers. We already approached all our customers where we were discussing about where we have potentially had identified that this is a capacity allocation to customer A, B, C, D. So we have identified all our customers. We have approached them. So now we are talking them to come take sample, the evaluation, and the further process. So this is right now the focus, and we are working on those. All my team is focusing and working on this particular line. So this is about the plant 3. Now we are going again is for the roller business also. We are expanding very fast. So we have a target to expand to similar level of 200 tons for the roller as well. But it is going to be stages, because we have to shift the entire product line from plant 2 plant 3. We have still not completed the entire shifting. So we are going to create new product lines for roller business also. So we have to expansions in roller business also, and ball where we are already established. We want to capture our customer orders as fast as possible. So these are the current ongoing strategy.
Great, sir. Just a follow-up on that. What would be the current capacity utilization of those local plants, plant 1, 2, and 3 in India? and what can be the projected capacity utilization for financial year 26?
Uh, if you just see the presentation, you must have
Yeah.
seen rural capacities. We are already at 89, around 90% levels, which is a fairly good levels. We have a good potential RFQs, which is like we are on hold or we are discussing, because we know even if we take those orders, we will be very difficult to serve them,
Okay.
so we are working on those debottlenecking solutions right now. So those capacities we can expand to the next levels. It will not be 100 to 200 levels in one shot, like what we did for ball, because ball was a total new plant. So all the establishment of new lines were there. So what we are planning is a stage-wise expansions, which is already going on. It's already good. So roller capacities which we are already at around 90%,
Okay.
and the ball plant which is at the old level at 50% level. Since
Okay.
we have already expanded in past many times to get to the new customers, the major OEMs, it is very important that we have to have certain facilities which has to be in meeting the global requirement. We have the
All right.
facilities now. So now what is important is we reach to the that particular level. We have a capacity of 200 tons. We were doing something like 30-35 tons last year. We have to reach from 30-35 levels to uh, maybe 180, 190, 200 tons levels in this current financial year. This is what is our target is. How fast we could able to do it, we are trying our level best to reach to that particular level. But when exactly, at times it's very becomes very difficult to define the customer point of view. But this is, we have to put our maximum efforts to reach to that level.
Great. Great, sir.
Thank,
Wish you all the very best. Thank you so much from my side.
thank you, Mulesh. Sir, we'll take the next question from Rahil Dasani. Please go ahead.
Yeah, hi, good afternoon, sir. Am I audible?
Yes, Rahil, all good, thank you.
Yes, sir. First of all, thank you for the opportunity. So, straight going to the France acquisition, I just wanted to expand more on it. So, you gave two pointers. One, that the customers are shifting to us already, and two, that it takes a long time. The other customers are taking a longer time. So, if we can break this down, uh, what's making them shift to us from their existing suppliers? What are we doing better? As I believe product wise the existing supplier would also be sufficing their need.
uh, I have already explained, Rahil. See, this is like sustainability. They just don't want to change from X to Y. Just like some, they are buying from someone, it could be anyone. We know who they are buying from. We know, but they will just not shift just like that. Just like that. These are like major critical applications. So it's maybe pharmaceutical or automotive, so they just don't shift like that. It has, SKP has to sustain, prove to them. They will start with smaller volumes, then they will go to a larger volume. But I have already explained the potential is like what it was past 10 years, 15 years back. This is the potential. Yes. And we have the same infrastructure, everything the same. We have more muscles because we have a integrated solution available India and France. We have a more sourcing powers compared to what it was. We are more flexible organization, so we have everything availability. So but it will take some time for these customers to get shift from the present. They will also not go to would like to go to a directly. If they were buying in past 100% from this particular organization, they may not entertain us to 100% level. They may charge start with 10%, 20% or whatever. But over a period of time we have to prove, you know and then we are hopeful that we will be in a position to prove that.
So sir, that's what I'm trying to understand. I get your point that it will take time, and I fully agree with that. I'm trying to understand as to why will we go into that. Are we pricing our products cheaper? Is our precision better, why would we replace those suppliers? That's what I'm asking.
Oh, yeah, that's again very good question, very good question. But I'll answer you this thing. See, globally for European manufacturing or other countries manufacturers, the sourcing hub is either India or China.
Hmm,
Okay. Now the next question is, how are we cost efficient in Europe?
hmm,
Two factors. One is the raw material cost, and second is value addition. Okay.
hmm,
Raw material, we know globally where to source the best pricing of raw material, we can source those. So we know if it is manufactured in India, we know what is the raw material pricing in India. If it is manufactured in China, we know what is the raw material. So we have a global playing field for raw material sourcing. So we know at the same raw material pricing, we will be in a position to match. We have to manufacture now in Europe with highest efficiencies, which we are efficient. We are our highest efficiency levels. So now we are combining synergies. That is what I was trying to explain in my
hmm,
call. We combine synergies, so we do our sourcings at global level. So we try to control our cost of sourcing, and we optimize on efficiencies levels of Europe to combine thing. Number one, number this is one side. Second side, if any European manufacturer is suppose importing the similar product from anywhere other than Europe, they are subjected to certain duties and energy cost.
yes, yes,
So plus they have another cost of transportations. They have another cost of risk.
hmm,
So all these combined together, there will be around delta of around 22 to 23% globally. So if you source in Europe from anywhere from other, there will be a delta of around this particular percent. Plus the risk, plus the risk. We can work in Europe in just in time. We are working for some automotive customers in just in time solutions. So this is the advantage we are. So we give them the cost competitive product, we
hmm,
give them good quality product because we are having all the infrastructure in Europe. We give them just in time, we give them sustainable product. We are a European company, so we are sustainable. We are
hmm,
present next to them. They can just visit us, maybe few hours flight or few hours drive.
hmm.
So what is missing? Please tell me what is missing.
No, I guess there's nothing missing in the puzzle. I got your point. That was very helpful, sir. So my next question is, like you said, we were doing 10 to 15 million in 2010-11. So point being that the asset base of the France entity is very old. So would that, first of all, is our product quality output stable from that unit? Are we getting that sort of a precision? And second of all, since the asset base is so old, would we be able to reach the same levels of 10, 15 million whenever we have that utilization, of course? Or would we need to spend more on upgrades or something?
Um, Again, very good question, Rahil. First, I would like to answer about the asset quality.
Hmm,
Very good quality, very good quality. Of course, there is upgrade needed at some particular point and some positions. We are doing that. So we are working on upgrade because we know globally what is the new technological levels which we have available. So those
hmm,
upgrades we already started doing it since last year. We are just not
hmm,
getting customer back just like that. They know they visited us. They see, okay, this is the changes which SKP is doing. So all these changes, what we are doing, we are showcasing our customers, showing to them that what SKP is not the previous management or previous thing. So we are a different. So we are giving them, showcasing them the product which is a far more superior. Now your question about technologically, we produce certain qualities which is almost impossible by global manufacturers. I
hmm,
can tell you this because I know there was a customer. It's a very interesting story. There is a customer, he is supplying to such a critical application, they cannot risk the product quality. Such a critical application, huh? Please understand. Mind my word, huh? Very critical. I will not tell the name of the customer. I will not tell this application. But such a critical application, I think in their one particular assembly, 6 or 7 of our ball goes. When the customer had come to our place to meet us at very initial stage, okay, they had explained to us that one particular assembly of theirs, where our 6 or 7 of product are going, holds the weight of one Mercedes Benz truck.
Wow.
This is the weight their assembly has to hold, and this is such a critical requirement. And they said, when this particular company was in problem, we had to look for the supplies globally. They are global players. They have plants in many global locations. So they say that we went looking for the suppliers globally. Now, when I say globally, it's global. It's India, China, USA, everywhere. They say we had to modify our drawing, because the customer is not in position to do that particular quality levels. And when we heard the news last year, so we were very happy. Okay, this company is going to be survive and going to be there. So they had come, visited us, explained to us the criticality of the product, and when they said that, okay, technological everything available with the new muscles and with new solutions, and we are there to serve you. So they're very happy. They are still our customers, and we are adding many more customers like this. Many more customers. I can just name one of the very prominent customers, which is within the this particular business. I'll not name the
Understood.
customers, but uh, they have come us. Okay, they have met us. They said, okay, we would like to see whether you still exist in the same, or you just import from India or China and sell here. Just want to use the name. I said no, we are a manufacturer. We have a manufacturer entity in Europe. We are here. Please visit us. And whenever we say to our customer, we say, please visit us. We show you. We give you more options. If you want to source with India raw material, no problem. With China raw material, no problem. You want a European raw material, no problem. It's you who decide what do you want. Okay. So this is the thing which we provide.
Understood, sir. I got my answer. That was again very detailed and very helpful. Sir, my next question is on standalone basis. I see our numbers are flat. I understand in rollers our capacity is almost fully utilized, and also there was a issue in the heating line, uh, which I assume is solved now. But what about the balls unit? I believe they are still at 50% utilization, and last year also they were at 49%. So why didn't that scale up?
I have explained, Rahil, this particular thing in my previous calls, but I'll repeat again. See, we are reached to a one level. Okay, these are customers at for this particular level. Now, when we want to capture major OEMs, I cannot capture with this particular level of my infrastructure. Simple, as simple as this. I have to have an infrastructure of a different level to get those customers to my mm, kitty. Okay, so that's what we have done now. We have approached all our these customers. We have tell them that, okay, we are ready for you to receive you. Please visit us. Do all validation trials, whatever you want. We have. So this is the work right now going on.
Understood. That would be all for me, sir. Again, it's a pleasure talking to you as always. This was very helpful. Thank you.
Thank you.
Thank you, Rahil. Sir, we'll take the next question from Ashwani Agarwal. Please go ahead.
Yes, am I audible?
Yes, Ashwani.
Yeah, good.
Hello, sir. As a new investor to your company, I'm actually looking to better understand the long-term picture with respect to our French acquisition. I appreciate that, yes, the company is currently navigating some challenges, and yes, the full benefits of the acquisition will take time to materialize. But can you please provide some detail on the I mean, the thought behind the acquisition, the overall opportunity which it presents, and what was the strategic thinking behind it. If you can explain this using some figures or some key capacity figures or anything, that would be very helpful.
First, this is a very strategic acquisition. The basic motive behind this particular acquisition was to capture our new customers. Okay, number one. Number two, we in from SKP from India, we were supplying to European customers in past. We lost those business because of duties, because of the risk, because of the cost, which I have already explained to you in the current call. Like that, we have a delta of around 22-23%, maybe even more if you take the risks into account. So those customers we lost. For them, uh, when we have to approach them, when we have a European entity manufacturing with the same approval, like same is SKP, ultimately it's SKP, so we are already at one particular level, so it's very easy to get those customers back in our kitty from those locations, so we can get the lost business, number one. We can get the new customer lines globally, so we can serve globally all these customers. So we offer them two sites, India site and a European site. So two sites for them for a global customers. So another risk mitigation. So these are the strategies, long-term strategies, not short-term strategies. You cannot get results in short term in 1 year, maybe 2 years for such type of acquisitions, because these are long and these are very big business uh, uh, applications, like business, very big business. So it takes little time, little more patience. It need to be there, and it's a complex technical product. It's not it's a product of go buy across the table like that. It's a pure technical product. I hope I answered your question, Ashwin.
Ashwani. Sir, we'll move on to the next participant. We'll take the next question from Pankit Shah. Please go ahead.
Yeah, hello, sir. Good afternoon, sir.
Good afternoon.
Yeah, sir, I just wanted to know regarding our domestic operation, regarding our plant 3. I believe that we have been uh, trying to tie up with new customers, right? For regular supply. So, sir, just wanted to know how many new customers have we tied up for this plant, and how much capacity is currently tied up, and what is the status for that?
Okay, I have already explained to you that we have already identified for our capacity, which is around 200 tons. We already have identified. We have a customer A, B, C, D. These are the customers. Their requirement, everything laid down. We already approached them, informed them that our plant is commissioned. Please do all the next levels of approvals and procedures. So this everything is going on right now. Everything is going on right now.
Okay,
So
okay. So,
it's not tied up. Please understand one thing. It's not. These are the technical products. All the customers take some time for plant approvals, because it's automotive. It's majority it is automotive bearing and these type of applications. So they take some time of validating and approvals. But more or less we have already clearly identified.
Uh,
hello.
Shrinan, sorry, I think your voice is not clear.
Yeah, I also cannot hear
Yeah.
your voice, sir.
I think his network is stuck. The Palshiga.
Yeah, I'm okay. I'm perfect. Can you see
Yeah.
me? You
Sir, actually, we were not able to hear your voice.
okay. Actually, all
It's
our
just the last line
capacity.
got mixed out, sir.
all our all our capacities, sizes, volumes, everything is identified, is linked to all our customers. We already approached them, and we are in the next processes of uh, due diligence in this particular.
So they do have requirements and they are willing to buy from us, but it is just a matter of validation and approval. That is what is going on. Is it what you are trying
Even,
to say?
yeah, even in some customer, even the commercials are settled.
Okay, okay. So uh, so with your base judgment, how much time? I mean, can we expect at least 30 to 50% capacity utilization for this new plant in this financial year?
Oh, I'm trying at least 50% utilization for this financial year for new plant.
Oh, great, great, sir. Uh, yeah, yeah. That was only the question I had. Thanks a lot for this
Thank you.
opportunity.
Yeah.
Thank you, Pankit. Sir, we'll take a couple of questions from the chat. One of the questions is, sir, what is our company's long-term vision? I remember from the last call that we have a vision for expanding revenue from 50 to 100, 100 to 200. Can you share the updated vision which the company has for the next 2 to 3 years?
This is the this is a long term vision. Okay, we have to have on consolidation level the capacities utilization and the revenue figures of something like this. Our top line and also our bottom line is going to be, because we have all our major expansions which were there in our capex, we have already converted to our assets base. We are now it's our time to start utilizing them. So this is a very clear focus. We have a very less uh, the cost of finance, the very less exposures. So I think long term is the top line what we have projected. Okay, we want to grow and grow at a very good pace on consolidation level, and also we want to, because of the
Hello.
on consolidation level, it
Yeah,
will place in the time to come.
I think, sir, we lost you for a second.
Again,
Yes.
okay. Uh, at consolidation level, we plan to grow at much larger pace.
Okay. Okay, sir. So this question was from Srinivasan V. Another question from Srinivasan V is, uh, can you explain where our margins are better in roller or balls?
I had been getting this particular questions for maybe since the day we listed. Okay.
Okay.
See the margins. Yes, global margins. You have to be. Always people know that rollers, being complex product, have got less, more margins compared to balls. But our approach is little different. We want to have a good margins even in ball with very high level of productivity. Technologically, these all technological things we are getting from France, because they are of very high level of productivity. Those productivity levels are almost unmatched on a global level. People have copied from that entity to other countries to have that level. So we want to be more productive and more cost efficient to have a very good margins overall. You must have seen how, if you take at a standalone level, we had been performing almost the same, our margin levels, almost same margin levels. But yes, ball margins are little tight compared to roller margins.
Okay, sir. He further asks that what are the products that will be manufactured in France unit?
It's the more same product lines. The product line is the same, but the applications are different. They are more in pharma, more in cosmetics, more in automotive complex, more in inox.
Okay. Thank you, sir. We'll take the next question from Gaurav Singh. Please go ahead.
Thank you so much for the opportunity, sir. Uh, I had a couple of questions on the France entity. What's the monthly wage bill or operational cost that you're incurring in France as of now, and what was it at the time of acquisition?
Gaurav ji, you must have seen in the past when we had done an acquisition, we had given a disclosure as to what was our acquisition cost. So that was the cost of our acquisition was the cost of employment. Okay, the employees cost because which we have taken our all the employees. So also current year we have you must have seen our cost of employees is very high. Cost of employees is very high. So we are these are there are out of these costs, many of the costs are one-time cost. It's already there in our financials. If the people who have studied our financial in deep, we have tried to mention somewhere. I'm not sure where, but we have tried to mention that many of the our employee costs are one-time cost.
But
So we are
post this one time, what's the monthly wage bill now in
uh,
France?
see, France, the minimum wages are is close to around 3,000 euros
Yes.
per person. Okay, so including the social, is because the social is very high in Europe, and the
But
France is high.
total for the company, for the company, what's the total employee cost now going forward, monthly basis? I
You
just
want
want
me?
to understand at what level of revenues will we break even?
We are project to do this particular turnaround next year.
What kind of revenues would it take for you to break even next year?
Around 4 to 5 million, between 4 to 5 million will be green.
Okay. And you're targeting 4 million in this year, 3.8 to 4 million. So a question on the domestic side of the things. See, there have been no doubts about your cost optimization skills. But for the last couple of years, we haven't been able to scale up our revenues. They've been flat for a variety of reasons, including the project, which has itself taken a long time to come on board. So, given that now it's end of the road on the capex front, how fast can we scale up our revenues? We've all been patient investors. So over the next couple of years, how do you see this scale up happening? We understand that you are trying to onboard customers for your balls plant, but where are we exactly from a revenue perspective, and what kind of revenues do we expect on standalone basis at least this year and the next?
Uh, uh, very complex question. Looks very easy, very simple, but very complex. See the yes, for the roller. See, we are already at very high operating level currently. We are like stuck. So now when we have to go to scale to the next level, we have to do scale up of certain debottlenecking operations. Okay, now we have those who have visited us, they know that we have almost no space in our current plant to do that particular thing. So ball was occupying some particular space. Now we have shifted that particular. We are shifting this particular. This process is on right now. So this particular thing is going on. So we are already working on new debottlenecking of certain operations so that we can increase our customer what do you call is we can get more customer volumes for this particular roller business. So we are already working on that. We are already working on this particular capex on these particular lines. Now, how much this year? How much this year? A very complex question to be answered. Really, we want to do the best possible because we know the potential. It's not like that we don't know the potential because we know the potential that this is the thing we are not in a position to do. So some customers where we know they've already come us, audited us, already everything is clear. Okay, you do this investment, and we want to start business with you. This is a level we already reached. Now, and there, see the level of quality level, consistency level, the operations level. SKP is one of the top for rolling element. So now, how fast we encash this particular customer confidence, this is our focus right now. We are already working. It's not like we are laying our any stone. My people are working like anything. But some things are taking more time than expected. So, but we are working. for the top line to grow. How much it will go this year? Of course, it is going to grow and it's going to grow good. But how much number we are even if I target something, we are not in a position to do that particular number. People, investors will say, okay, you said something, and then you are not positioned to do it. Okay, we are projecting a very good number for this year also, but how much we are in a position to capture to that particular level, we don't want to leave any of our efforts, less efforts, not because of efforts, but the circumstances. Okay, so we are focusing on our efforts. Circumstances will leave in his hand.
So of the 50 crores of
Gaurav,
revenues that
sorry,
yeah,
Gaurav, may I request you to rejoin the queue, please?
sure.
Yeah. Sir, we'll take a question from the chat from Jaideep Merchant. He's asking that in H2 we have zero raw material cost in France and operating expenses are also down from 6 crore to 2.4 crore. So is it correct to assume that the plant is running at low utilization?
Sorry.
Yeah, in H2 we have a zero raw material cost in France.
No, it's not zero. I'm not sure as to why this particular question has come up. It's
Okay,
not zero, but it's less because
okay,
we had a lot of raw material inventories. We are converting those all inventories to cap to supplies. Okay.
okay, sir.
And what about the second question?
Operating expenses are also down from 6 crore to 2.4 crore.
Mm, I think there's something wrong with some figures where from these are
Acha.
coming.
Okay,
But
okay,
the operating cost for the full financial year, uh, I'm not sure as to, because there are a lot of one-time cost in H1 compared to which is not there in H2. So it could be because of that comparison there will be some figure difference.
okay, sir.
Sir, his next question is, we have seen a sharp jump in employee cost in France in H2. What is this related to? And have we done any rationalization of workforce over there?
Yes, both are interlinked questions. So the answer is interlinked. The question itself is answering its yes. Yes, there has been we have, because of our cost controlling, we have been working on economic dismissal. So we have tried to control our employee cost. So there is a, when we do this particular type of activity, you need to pay to the employees for the dismissal. So these are the cost, one-time cost.
And have we seen any unrest in France amongst the employees on account of this process?
We are trying to control our cost. So which was a very very clear drive. Okay, we want to do all our cost controls, which is not as per legal requirement, so which is
Hi-
not legal. So we were trying to control, okay, this is the cost which is not acceptable. That some of the cost which we try to control, some employees did like it. Okay, so they protested, but it's okay, we resolved it. It's just yes, there was 2 or 3 days of strike, and in France, I'll tell you one more thing. Strike is very common. Even the railways are on strike today. They will decide tomorrow we are going on strike.
Right. I'll skip other questions which have already been answered in the call. His next question is on the India business. Have you seen any success in export markets in getting new OEM clients?
Oh yes, good success. But the problem is, we have a limited bread as on date. So if we have to eat all the bread, we need to have the ample of a big plate to eat that bread. I hope I am explaining this very right manner. So we have a very limited capacities right now. We have a good huge requirement from customers, but to capture to that levels, we have to do uh, a lot of working for debottlenecking on certain operations. Right now, we are all working on those lines right now.
His next question is, as the new plant will have more ball, uh, and when this ramps up, will we see margins moderating down?
Uh, New plant is exclusive a chrome steel plant. Yes. So this is one question is answered. Second question is the margins moderating. I've already replied this particular question in my previous That margins is how do you control your top line and how do you control your bottom line, your cost. Okay, so we are trying to do our level best to control our cost, so the margins we try to sustain. Let us see, we are trying to work on that particular thing.
And his last question is, can you talk more about outsourcing opportunities of rollers by bearing companies?
We are doing that particular thing.
No, he's trying to understand the opportunity
See,
of outsourcing of rollers.
all bearing companies, all bearing companies don't make any rolling elements. Okay, if you name, you take all the bearing companies, top five, top 10, nobody makes it. Okay, now these all bearing companies has to source their rolling elements requirement for some. Okay, so for rollers as well as for balls. So these are already directly or indirectly our customers. We are already supplying to them, but some of the bearing companies are importing for them. So we are focusing on them more vigorously, more focused as to we need to convert that particular requirement which we are importing to our domestic. So this is what we are working.
Sure. We'll go back to the next participant, Samarth. Samarth, you can go ahead.
So am I audible?
Yeah, all good.
Sir, post capex, we were going to have 200-ton roller capacity and 200-ton ball capacity per month, right?
Balls, yes, right. For rollers, now we'll start. We are already working on it. I already explained.
Okay, sir, and this when we are going to expand the roller capacity, we were targeting the new applications like windmill, railways, and that. So do we have to undergo a large client approval for the facilities in India, or so will it take more time to scale this up?
See, these are all ongoing activities. See, client approvals, because we already have a manufacturing plant, everything is running. Maybe capacities is not allocable, is we cannot allocate the capacities, but we are already discussing. So with this product validation, sample submissions, approvals, these all processes already on. This nothing is like, it's not like you do this and then you approach. So we already approached. I already explained that I feel this that I cannot capture the particular customer's requirement to that particular level, even though customer wants to allocate. So this is we are holding certain processes where we are bottlenecking right now. So we are working on that particular to debottleneck for the roller.
Got it, sir. Sir, and as far as like you had mentioned also that when you, in the balls that the bearing companies buy, it is largely outsourced. But in case with needles, pins, and rollers, there is still lot of in-house manufacturing that the companies are doing. So any timeline that you can share that this will gradually increase more and more to efficient players like you. Mm, Can you talk more on that?
See, from SKP side, our focus is to convert customers' requirement to SKP. That's very simple. We have to drive. We have to go on approaching the customers, work on that particular thing for all the necessary processes of validation and approvals. So this is already ongoing process. But you please understand, even if there is a requirement, we cannot just go and talk to customer. Okay, you give us your requirement, and then we are not in a position to serve the customer. We don't believe in that. We believe in 100% customer satisfaction. It has to be in terms of quality, in terms of delivery, in terms of cost, everything. So we don't want to just add the customer for sake of adding the customer and then create a unhappy customer. We don't believe in that. So uh, we don't want to lose any customers, and we have never lost in past any customer.
Got it, sir. And in your past call, you had even said there are some customers in US and India which VGI was doing earlier. We'll try to move it more towards the India factory. So, any success in that?
We are working.
Okay, sir. And as balls go up in a percentage of turnover, and this year probably will have a higher turnover from the balls segment. and balls historically have a lower margin compared to what we do in rollers. So do you see the margins in India also moderating this year going forward because of the product mix solely?
See, that's again same question is being repeated now. See, the margins again is a top line and the cost. We want to see that we want to ensure we sustain. This is our focus.
Got it. Sir, and in France, we have a 5 billion ball capacity, 70 crore roller capacity, and roller, as we know, is more labor intensive operation. So, any in long term, can we move this roller business completely in India? Uh, or we will still stick to France?
See, please understand the technology. We had to learn many things from SKP France, many things. Even though we are in existence since so many years, still when we acquired, we found so many scope of learning from that particular entity. Please understand. So please don't consider that they are inefficient. They are highly efficient with so less of manpower. Also, they are doing this much of turnover. Please, so their advantage, their knowledge, they are a different level. So there are so many things to learn from them, and of course, we have also over a period of time developed certain very good positive on technological front. So this is a technology transfer. So this is what is we are doing at integration.
Sir, any investments we have to do in France? That is my last question.
I've already told in my call, even now also, that we are doing this particular because with that only the customers are coming back.
Got it.
Thank you, Samar. We'll take the next question from Pankit Shah. Pankit, you can go ahead.
Yeah, thanks for the follow-up. Sir, last time we discussed about one new product. You mentioned that you were working on some new product for different application, for different, I think, different target customers. So, can you just share what is the development for that?
Please, you need to be more elaborate because so many products we have already developed and so many products have already clicked. But if you have a more elaborate, probably.
I believe for windmill, I guess for any windmill application, we were developing something.
I'm really not sure for so many because we have so many applications focused. We were working. Some applications have already clicked. Already that business is converted. For some applications, still we are at some particular stage. So that is valued for the value-added product. So we are at some
Yeah.
particular stage. So see, our drive, our focus is very clear. You have to have value-added product services to our customer. You have to have a diverse of portfolio. So we are working on all the fronts simultaneously. So
Okay.
we
So
are
I mean,
working on that.
apart from balls and rollers, are we currently working on any new product development?
That's what just now I said. Just now.
Okay. Okay. No issue, sir. I'll try to find out. I mean, on in which call we discussed it, and I'll get in touch with you later on.
No problem. You
Yeah.
send us the specific.
Yeah. Sure.
Thanks,
Thanks a
Pankit.
lot.
We'll take Gaurav Singh as the last question for the day. Gaurav, you can go ahead.
Sir, of the revenues that you did last year, how much came from renewable energy?
Percentage?
Standalone entity.
Hello?
Absolute, sir.
Absolute terms?
Absolute revenue. Absolute revenue.
I'll have to check the figure. Because
Broadly, I'm asking.
For 25, 20, 24, 25?
Yes, yes, last year.
24, 25, we should be, for anybody from my team, Samir?
Am I audible, sir?
Yeah, yes.
Yeah, renewable energy comprises 5% of revenue.
But what is the in
Standalone.
So 2.5 crores last year we did book.
Hold on.
5% of standalone, right? Or 5% of consolidated?
Around, yes. Standalone.
Stand. Okay, understood. And sir, just one final question. I understand you are in active discussions with your clients for your new balls capacity. Uh, uh, Wherever you are in those conversations, do you expect by the end of this year, so FY26, March FY26, at on a monthly basis, will you be able to get to 80 to 90% capacity utilization exit rate? I'm asking. So in March 26, will you be able to? You still have a good amount of time till then. I'm trying to understand how does this scale up. So in the month of March, last month of this year, will you be able to get to 80, 90, 100% capacity utilization?
Gaurav, I would like to answer this question very straight and blank. Okay, I have 5 lines of full operational, everything operational. Okay, I get a customer approval, I get a customer nod for commercially clear, everything clear, everything clear. I have a raw material available at my doorstep. Please understand. Huh? Raw material availability at my doorstep. I have an infrastructure available at my step. I have a customer acceptance at my doorstep. Okay, customer says, okay, today is 2nd of June. I give you a LOI for month of July. Okay, 200 tons, right? This is the readiness of our plant. 200 tons LOI for July. I think we should be in a position to do something like between 150 to 180 tons in July.
In actual July?
July.
Okay, so
we are in July, next month. I have a LOI, I have a confirmation, I have a purchase order from my customers for quality acceptance, facility acceptance, everything a green, a go from a customer, okay, that I give you order for 200 tons. Please start supplying for this product lines. My infrastructure is ready to accept anywhere between 150 to 180 tons. May not be 200 tons, but between 150 to 180 tons for July, next month. So see, so my side is I have made very clear we should be ready to receive. If your hotel is not ready, you how you can get the guest? If your hotel is not ready, you cannot ask a guest, okay, I have a 5-star hotel, please come see my photographs, see book your room. Okay, you can say okay, I'll see when your hotel is ready, something like that. My infrastructure, so my focus very clear was to make the infrastructure, and I know what is world class requirements. I cannot give a facility, I cannot give a facility or quality equipments a 2-step or 3-step or 4-step lower compared to what my current customer is buying. I have to give him something which is one notch higher, and these are technological products, please understand.
Thank you so much.
Thank you, Gaurav. So since that was the last question for the day, would you like to give any closing comments?
First, I would like to thank you, everyone, all my investors who believe in SKP, and they have they have trust in SKP. We are very available anytime. People who have visited us also, they were seen. Okay, and so I will invite anyone who has got any questions, so they would like to visit us or to meet us. We are available. Also, we are available in France because we are some of my team members are already traveling to France on a regular basis. Somebody would be also available. We are very close to Switzerland. We are just 2 kilometers, 2 hours drive from Switzerland. So we are like Switzerland. It's a place. It's beautiful. So we also invite any of our investors. They are in that particular site. They are invited to visit us, meet us. Thank you very much.
Thank you, sir, and thank you to all the participants for joining on the call. This brings us to the end of today's conference call. Thank you so much.
Thank you.